So we sat down with Callum, who's in his mid-20s. Him and his partner are looking to buy a property in the future, whether it's now or in the next couple of years. And they have thought that they will never be able to afford a home in Calgary.
And actually, I've pre-approved them for their mortgage. I have the number that they're qualified for, and we're going to reveal this to them live on video.
So if you are a first-time home buyer and you are thinking of making a purchase, whether it's this year, in 2 years, maybe even 5 years, this conversation is probably one of the most important ones you can watch, and it's worth spending the time doing so. Because you need to connect yourself with the right agents, with the right mortgage brokers. You need the right information, have the right strategies to be able to actually make this home buying dream a reality for yourself. So reach out to us, info@Chamberlain Group, if you have any questions. You can reach out to Hugh for any pre-approval stuff, which is all information is in the description. But let's go chat with Calvin. Well, thanks so much for joining us. I'm excited that you're here. You're a first-time buyer. This is all nervous. Are you excited?
I'm excited, yeah.
Cool. We were just chatting a little bit and you were talking about how you want to understand the process of buying, what it looks like, how it works. We have got our man Hugh over here who has already worked through your finances, and we're going to talk about the process. We're going to talk about what you can afford, and honestly, no questions off the table. So ask anything, because whichever camera I'm looking at, they're looking at you.
Yeah.
They're asking the same question. And so this is going to bring a lot of clarity to a lot of people. So thank you.
Yeah.
What do you think is the first part of buying a house, Hugh?
Getting pre-approved for a mortgage.
Amen.
Yeah.
Amen.
That's the most important bit.
Why is it important?
It's important to know your budget,
Yeah.
more than anything. And obviously it's important to know that you're actually going to get approved. A lot of the times we can think, oh yeah, I'll get a mortgage, no worries. Yeah. And I think having the confidence when you go out and view houses, I can afford this, I will be able to buy this. Yeah. Whereas if there's a sort of feeling that, you know, what if I can't afford this? You know, that part of it's amazing. Having a budget, and we can sort of figure out we'll make sure there's no hidden surprises. So for example, if maybe someone's got something on their credit that needs to be dealt with, or on their down payment, we know up front, rather than scrambling in like 3 days to figure out exactly what that is. So
yeah,
totally.
Those to me are the most important pieces.
Honestly, the first time I ever heard of like even mortgage brokers, I thought like my view of what buying a house looked like was I need to have the money in my bank account, and I need to
like cash.
Like I need to be ready to get it, and then you just go talk to the bank and they say this is what you can get.
Interesting.
I didn't really know much about mortgage brokers and getting pre-approved and stuff. I'm very base level knowledge in this, but
help the man out.
Yeah. In terms of finding a good lender.
How do you find a good lender?
So being a broker,
does he have to be British?
No, it doesn't have to be British. No, but being a broker, basically we have access to many lenders. We're not necessarily tied to one specific one. So when you go into your bank or your credit union, you're tied to their products and their offerings. And a big part of that is whatever rates they have, you're going to get what you're going to get. But you don't necessarily have the personal level as well. And I think that's an important thing, especially people our age. We want to be dealing with people that we trust. We can get on the phone maybe at 6 o'clock after work, or we can chat to on the weekends. Because we like to almost have that instant gratification of talking to somebody rather than waiting for 5 days or whatever it is. So, but when you come to a broker, we have, I think in our end, 15 lenders, that we can go to as part of Mortgage Connection, and then there's much more as part of a bigger network.
But out of those 15 lenders,
and of those 15 lenders, to be honest with you, there's about 4 or 5 really that we work closely with.
Each of them and each multiple product.
And I think the first step really is, okay, who's got the lowest interest rate?
Totally.
That's going to be the best bit. Now, sometimes there's a low interest rate, but it can have perhaps, I wouldn't say hidden features in there, but certain clauses where really you can't get out of the mortgage unless you sell your home, or perhaps some higher prepayment penalties, which for somebody who's looking to buy the house and live in it for however long, that's not necessarily a bad thing. But it's important to have something to help you navigate figuring out which is the right mortgage for you with the lowest interest rate.
And I think the thing too is when you go to the bank will have, a handful of mortgage options for you, and they will try to squish you into one of those. If you don't fit perfectly, because not everyone's finances and situations are always super clean, right? could be credit issues, there could be down payment things, there could be self-employment, there could be so many different things that come into play.
Yeah.
And so if you go to a bank, they're going to squish you into one of these. Where if you go to a mortgage broker, they're going to go, oh, actually, I probably could go to that bank that you're going to anyways. And most likely that one over there is going to be better for you because now I know who you are and what you need. That one's going to be the best.
Right.
And then we're going to be able to get the best rate for your needs, even if it's not the lowest.
Yeah.
Because again, some of those lowest rates have these hidden clauses where, let's say if you want to get out of your mortgage or you're selling, their costs to get out could be astronomical. I think the biggest thing that someone said to me once was, even just because it's a cheap interest rate, the bank will always get their money.
Yeah.
So they're going to get their money on the back end or the front end. And if they have a lower rate, that means the back end, they're going to get more money.
Yeah.
So no matter what, they're going to get their money.
Yeah. Like how do you choose between a fixed and variable? How does that, do they offer both, or is there like one that only has one?
Yeah.
Yeah.
So what we would do basically actually today or next week, depending on the time frame of when you'd like to take possession of your home. So let's say you want to buy and be in within the next 4 months or 120 days. We will actually go to a couple of lenders and we will hold some interest rates for you. Really, the general consensus now is we'll do a 5-year fixed and a shorter term fixed, probably 3 years.
Right.
And so we've got them held. Now, if those interest rates happen to creep up over the next, month, 6 weeks, 2 months, okay, well, you're protected, you've got these low rates.
Yeah.
If rates drop, well, you'll get the low rates anyway. So it's kind of a bit of an insurance policy. So that's one thing we can do to kind of make you feel good about the rates that you're going to get. And then when it comes to actually buying, you're going to have this period of, a week or two or a few days, however long it is on you, depending on your offer, where we've got to get you approved for a mortgage. Yeah. And at that point, we're going to finalize, okay, do you want to go with a fixed or a variable? And there's, benefits to either one. Really with a fixed, it's going to be, what your rate is. There's no risk of it going up. We can sleep well at night. There's no concerns if interest rates are going to go up. It's great. And for a very risk-averse generation like ours, it's nice to have that and not be stressed about that.
Yeah.
But there might be something to be said, at this point with, a variable maybe being the better way to go. Everybody is saying that they should drop, this year. By how much is down to the Bank of Canada, not us. And so timing that is a bit of a juggling act, and is likely a shorter term fixed or the variable that's going to be the better one for you. And part of the reason why you wouldn't want to go necessarily for the longer fixed is if interest rates over the next few years do drop and you say, I want to sell a house, or, we've had a child and need to move somewhere, or whatever that looks like. You don't want to have one of these extortionate penalties that you can get.
Yeah.
And so what that means is like, if you have, like, use your actual numbers. So like if you had what would it be a 5-year right now?
So a 5-year fixed right now is about 5.24%. We can do a 3-year fixed at 5.39. So that's so close, you might as well take the 3-year.
Yeah. And if you have a 5-year at 5.5, let's call it, just make it easy. Yeah. And in 3 years, you're like, I want to sell it. But now interest rates are now at,
let's say 4%,
or even 3.5. Right? They could go down into the 3s again, potentially, is what I've heard. So now you got a 2% gap. When you have a payout penalty, when you're selling, usually have, it's called the IRD payments or interest rate differential. And that one, when you have that much of a gap, they have their own calculations. But I've seen some payout penalties when they're really far apart like that be $16,000, $20,000. Yeah. And so what you want to do is you want to have the shorter term because rates are going to go down.
And if you go with the variable, it's only 3 months of interest. Yeah. And so timing that is important. And, we would basically make a decision on the difference, because a variable right now, you'd be looking at about 6.3%. Yeah. Now, as the interest rates drop, your payment will shrink as well. Right. Yeah. That's, I don't want to bore you with it, but that's called an adjustable rate mortgage. So the payment shrinks as interest rates drop. And so that's probably the best way to go. Yeah. But if you're like, I won't be able to sleep at night, like, what if rates go up? Then go for that shorter term fixed. Yeah. You'll sleep better at night, and that potential for the higher penalty, this interest rate differential, will just be that much less.
If I stay on variable for the term of 20 years of the mortgage, I know that I'm going to pay less because of the influctuations.
Yeah. There's a bit of short-term pain, certainly over the last few years for people, but there'll be a long-term gain there. And
so it's just really, it comes down to comfort of what you want. Do you want that? I know what my payment is.
Yeah, there's those periods of when in that 20-year period, there's those times where it's like you're paying a lot more. So you just have to be ready for that, I guess.
So I think a big part of all of this too is like down payment, right? And so what are you hearing when you're talking to friends? Like, what are strategies of saving a down payment, or how much do you think you need to afford of a down payment, all that kind of stuff?
Yeah. So just talking amongst my friends and stuff, we've been seeing things like the first time home buyers accounts and stuff. They've come out with a new, I believe it's a TFSA.
for the first time savings account.
Yeah. So we have been talking about that. I know some people have opened them, and we're all looking into stuff like that. But the biggest thing is the 5% first time home buyer down payment, which is something for me that I don't really want to do, because then I feel like my monthly payments will be too high for what I want to comfortably do. So for me, we've been talking, like in my friend group, we've been talking about how much can we put down more than that, because ideally, I think putting down a bigger chunk that I can comfortably put down would be better than a 5%. So that's kind of what we've been talking about. But
so what are some of your strategies on how to save more than 5%? Because sometimes it can feel quite daunting to save that much. But then for some like yourself, you're like, well, I want to do more. So what are some ways to do that you found?
I mean, for me, it's just cutting back on almost everything. We do no spend months sometimes, where we just take a month to put aside a bunch of money, and no restaurants, no coffees, no nothing like that.
That's when you interview a lot of mortgage brokers and agents, and you go for coffees with them.
Yeah, exactly.
It's a good month to do that.
Yeah. So we just it's just cut back on almost everything, on things you don't need. I'm in a pretty good situation with my rent right now. It's a pretty fair price, so I'm comfortable right now. So I have the ability to, go out. I can travel. I can do a bunch of stuff like that. But it's just being smarter with your purchases, and that's kind of my method of doing it. Other like investing is another one that we've all been doing. So it's a little bit tough to gather other people's opinions on that. But for me anyway, it's just cutting back and investing. So
it's good. I like it. Do you want to touch on the savings?
So as one thing I just thought I'd bring up, which is a common misconception actually, is that 5% is only for first time home buyers. So as long as you're going to live in the house, it can be your second, it can be your third, it can be your fifth home.
Oh, really?
As long as it's your primary residence, you can put down 5% on the first 500,000, 10% on the amount above 500,000. So just important for people to know that, because people always go, well, if you buy your next home and you sell, do I have to have 20%? That's not actually the case. So really important for people to know.
You only need 20% to not have CMHC fees. On top of it.
And if it's a rental, if the property is above $1 million, and if you're not going to live in it, again, that's really, it has to be 20% down. But there are obviously you have just your regular personal savings, money in your savings account, tax-free savings accounts. Then you have your RSP. Which we all know what that is. You save for retirement, you put money in it, it's a tax deduction for the next tax year, and then when you retire, you pull your money out and then you pay the taxes on it then. Now, you can pull up to $35,000 out so for the two of you, you could both pull out that much money, and you don't have to pay the income taxes on that money. The key to that is you have to pay it back within 15 years. That's a very long time, to be honest.
That's the RSP one.
That's the RSP one. And so it's basically it's not a loan. You're not borrowing from your RSP, but you're taking your RSP out. You don't pay the taxes on it, which is great, because you've already had, the tax deduction. So, the taxes that you get back originally is an extra bit of money. So that's one way of doing it. That's a fantastic way. This new first-time savings account actually is brilliant. It's almost like a mixture of an RSP and a TFSA. In the money that you put in is a tax deduction. Anything that grows in there, and when you withdraw money from it, it's tax-free, so you don't have to pay any taxes on that. That money has to go towards buying a home, though.
Yes.
If you don't buy a home and you put it towards buying a car, well, then you have to pay the taxes.
Right.
So it has to go towards that. That one is $8,000 a year, up to a total of $40,000.
Right.
And it does carry over from year to year. If, for example, let's say in 2023 you didn't put any money in, or now you've got more room to put.
Yeah, you can
money
put
in.
like
Because
last
that
year's amount.
started it in 23, right?
Started in 2023, yeah.
Right.
Okay.
Yeah.
And you can use them together as well. There was, when it first came out, they did say that you have to choose one or the other. That's not the case anymore.
Okay.
So you can use both.
Okay. Yeah.
So if someone's looking to buy in 4 years time, let's say, or 5 years time, and you can use both contribution limits, and as a couple, there's a huge chunk of money in there that people can use.
So you can have
tax-free.
$70,000.
Yeah.
Use down payment. Yeah.
Yeah. So you can do $75,000 each.
Yeah.
That's a lot of money that you can put towards down payment.
When you're talking with your friends, are you guys talking about, or are you kind of concerned about like extra fees?
Yeah.
Fees that come up? Or...
Yeah, like lawyer,
Okay.
insurance, all those things, inspections and stuff.
How does that all work?
Yeah.
Okay.
No clue.
Okay. So a good rule of thumb
Yeah.
that we tell all of our clients is so when you're purchasing the property, to have about 1.5% of your purchase price set aside for closing costs.
Right.
So if you're buying a house, easy numbers, 500,000, put aside about $7,000 for closing costs. Now that's gonna be way more than you need, but I like to sleep at night,
Yeah.
knowing that I have enough to pay for things,
Yeah.
and save for things, right? So at the end of the day, really, it's gonna be a lot closer to probably 3 or 4.
Yeah, I think when you add in, if you add moving costs in there,
Moving costs would be about 7.
yeah.
But like, so if you're gonna have things like your lawyers. So your lawyers are gonna cost potentially a loan could be $1,500 to $2,500, roughly, depending on the lawyer. If you have an actual house, so homes, and so detached houses and townhomes, you can do home inspections on. Condo apartments, you can do home inspections on, but the home inspector can't actually look at the roof or the boiler system or anything. They only look at the unit. So they're checking appliances, they're looking at that kind of stuff. So you can if you want. There is still some advantages to it, but that could be roughly $400 to $600, somewhere in there. You also have potential appraisal fees.
Yeah.
Through the bank, and those look like
They're about $325.
Okay.
If there's a rush, we've got to get it tomorrow, then it creeps up to $400.
and then the other one is like a condo doc inspection.
Yeah.
So if you have the 3 different categories, detached, townhomes, and condo apartments, townhomes and condo apartments are part of condominium organizations.
Yeah.
Right.
They can pay condo fees and all that.
That's right. So if a condo fee is associated to it, that means there's going to be condo documents that you want to look at, because they're going to have bylaws and rules. They're also going to have a lot of the meeting minutes of what's happened in the complex.
Right.
Because in condos, you can end up having special reserve like problems. So what's an example? So it's like an envelope. So between the units and the garage, this happens a lot. The envelope is failing. So they kind of have to redo that from the garage underneath to the condo above.
Yeah.
So they might have to do fixes to it, or balconies outside are sagging the wrong way, and now water's coming into the units.
Yeah.
So they got to fix that, or fixing the exterior of the building. So things like that, they can just basically do a cash call, and that comes from the reserves of the condo corporation.
And what I'm paying into and stuff.
That's right. And so you want to make sure whatever condo project or building that you're buying into is healthy, has good reserves, they have saved a lot of money, they're managing everything well. And so that is something, and that condo document inspection is similar cost to like a home inspection. It's about $400 or $500,
Okay,
$600. So again, if you have 1.5% set aside, you easily will cover all of your costs.
Okay.
But it's something you want to kind of
it's nice. It's nice to hear like a number.
Yeah.
Because we look at these homes and You see the price and you're like, okay, well, maybe that's possible. And then you're like, well, what is the secret ones, the hidden fees and stuff. So
the nice thing that we don't have here is a land transfer tax.
Yes, I was going to bring that up.
Yeah, which is really helpful. So if they're in another province, it can be
tens of thousands of dollars.
Yeah.
So the whole process, I mean, you have your pre-approval, and then moving into the rest of what you need to do, a lot of that is connecting with an agent and looking for the property, finding that property, going conditional on that property or purchasing it, waiting for the property is really what it comes down to.
Yeah.
It's it sounds simple when you say it like that. But I think one of the things that in your next steps is kind of like connecting with a real estate agent, because you could go alone. You could go and call every single selling agent that has a home for sale, book it, go do all that stuff. But you don't have anyone representing your interests.
Exactly, yeah.
And so as a buyer's agent, when someone works with you and you're a buyer, they get paid from the seller. So when you sell that property, your commissions half go to the person you've hired and half to the person that the buyer has hired, is essentially how everyone gets paid.
Yeah.
So you don't have fees to the buyer's agent in our world, right? Really, for the most part. I mean, everything's negotiable. I have to say that because it is. And sometimes there are some sellers who don't offer commissions or full commissions. And sometimes it happens, I can maybe think of a handful of times over the last decade. But it's super rare that is the case, right? When it comes to actually searching for your house, once you have an agent and you're talking through the process and they've walked you through what to do and what to expect, then it comes time to start looking at houses. So we've run numbers. Well, you, not me.
Yeah.
Hugh's done some background work. And so what do you think? You said before you think it's like mid threes?
I think so.
Is what you guys could afford?
Yeah.
So let's clarify. It's you and your partner.
Yeah.
Buying together. Sharing kind of down payments, costs, figuring that all out. Right. And so it's a big reveal.
Yeah. So I guess we have two potential scenarios. One is with and one is without a condo fee. So once we hit a townhome or a condominium, there's going to be that condo fee. And if it's, you don't have the condo fee or it's a single family home, you don't have that. So
actually a good rule of thumb, and you can tell me if this is still true, because this is great for you and everyone watching to understand. For every $100 of condo fees, typically you can take roughly $10,000 or so off of your purchase price or what you can afford.
Okay.
So again, I use the 500 number before. If you can afford 500 and you got $500 condo fees, it could take it down to the mid fours of what you can actually afford. Is that fair to say?
Roughly, yeah. It's more like 7,500, but roughly that.
Okay. Yeah.
Are you ready? Just some drum. Okay, so basically based on your incomes and your down payment, without a condo fee.
Yeah, let's do that.
With 450,000.
Pretty good.
Yeah.
Pretty good.
Yeah, all right. Okay. And if we have a condo fee of, let's say, 300?
Probably.
300. Okay, so 300, we are at, sorry, this is very anticlimactic, 430.
430.
That's not bad.
So actually, it doesn't make a huge difference, really.
It's good. It's more than I expected.
Yeah.
I feel like I could get a decent home like that. I know, like my partner and I we would like a detached home if we can. I know the prices are a bit higher than that, but we have a vision of what we want. I think 450 is something that we could get something comfortable in. So
let's talk about where you want to live. So you were saying before you've kind of lived in the Northwest.
Yeah,
I now you live kind of inner city.
Yeah, when Stony Trail was being built, that's where I lived. It was on Stony Trail, essentially.
Oh, yeah, you guys backed onto it?
Yeah. So we were right there. We had farmers' fields and stuff there. And now it's developed. And then when it did develop, we moved even further with the development. So I've always been on the outskirts of Calgary.
Okay.
And then I moved to BC for school, kind of inner city Kamloops area. So I got a bit more kind of... It was downtown Kamloops, not too huge, but it was more closed and compact, and I was closer to things, and I liked it a lot. And then when I moved back here, we moved to I was in Confederation Park area, kind of close, and then we went to Sunnyside. So we're right in the middle of Calgary, which is that's what I like, is that I'm near everything. My job, I'm 5 minutes away, so
Cool.
That's kind of around this area,
Yeah.
and like central Calgary is where I'm looking for.
Okay. So what we did is, again, finding a detached home under even 5 inner city is going to be really, really tough. And if you do, it's kind of just land value for the most part, right? So what I did is I actually pulled together a search, and I want to share it with you. So this is a search that is all of Calgary right now, but it's basically kind of like high 3s, so mid 3s to like 425. Because again, it's roughly around that price range for something with condo fees. And so if we were to look at the whole city, like there really isn't that much available.
Yeah.
And townhomes right now are in such demand because of everything we're talking about here.
Yeah.
Prices going up, affordability, all this kind of stuff that's happening. And so you literally have, I think it's 14 options in all of Calgary.
Yeah.
There's nothing in Airdrie. There's one place, there's one place in Cochrane.
Oh, nice.
And so, but here's the good thing. Townhomes have what we call a month of inventory, like how quickly they flip over. It's really, really quick. And if I remember, it's around a month to a month and a half. So every, let's call it 6 weeks, you should have a whole new
Like set of houses.
Nice. Yeah. And so it's one of these things where you kind of have to wait and know what you're looking for, and then have your this is why pre-approvals are so important, is because then you have to jump on it.
Right.
And you have to not be afraid to go, I want that, and I'm willing to fight for it, and I'm willing to do it. In this market, if your max is around that 430, ideally you want to find stuff that's probably listed 400, 410, because in this market, you need, I'm making this up right now, you need fighting room.
Yeah.
And that's when you go into multiple offers.
Right.
You kind of have to plan that there are going to be potentially 2, 3, 5, 7 other people who also want that townhouse because of the market that we're in. And that's just the reality of our market. If it's priced well and it shows well, it'll go fast.
Yeah.
And so that's kind of the thing. But to kind of get a sense of what is out there, I mean, you have this place. So if you know where Point McKay is?
Not really.
So it's right down in here.
Oh, okay, yeah.
So right by Edworthy Park.
Yeah.
So something like this is a 1,200 square foot property. So it's listed at 421. So it's definitely older.
Yeah.
Man, you got brown shag in there. Like, how great is that? And so it's something that no matter, if you're looking inner city, no matter what you're looking for, you're going to probably have to do work to it.
Yeah.
Which you're good with? Or?
Oh, I'm 100% good with. I want to have, for me personally, I want to have the freedom, not right away, because I want to
do it in the future.
To do future renovations. Like, I want a place that I'm going to make my place.
Yeah.
Instead of, I don't look at the house as like an investment, like opportunity at all, because I want that to be where I am.
Right.
Yeah.
So I just switched things, and there's actually more. There's about 20 something properties for sale. But when you get up into, I'm assuming, which is probably close to kind of where you grew up in some ways.
Yeah.
Like Panorama, Evanston.
Hidden Valley is where I live.
Hidden Valley. Okay.
And then like right on the edge of Stony there.
Yeah.
And then we moved to Coventry up there.
Okay.
Yeah.
Actually, that was where my first house was. We Hidden Valley. But you end up finding places like 1,000 square foot, 1,000 square foot property in Panorama, 410, 2 bedroom, 3 bath. Some that are newer. When you get into some of these places like in down here in Beddington, like Bermuda Lane, they're going to be older. But as soon as you get to where you were living in Hidden Valley, Panorama, and North, you're going to find newer places. Something like this one here, where you have 1,100 square feet in Panorama. Not saying that this is going to be the best place, but you can get a sense of, compared to the last one we looked at, to something like this.
It's like more finished, yeah.
Yep. It's just newer. It is a very unique brick wall. And a random door.
Yeah.
That's like a secret, you gotta see that, a secret door. Hey?
God, it's like a brick.
Little wine cellar.
Yeah, a little wine cellar. So then you get a garage. There's probably a tandem, so you'd park in front of each other.
Oh, yeah.
So it's technically a double, but kind of hard to use all the time. So that's kind of the difference of the areas. So if you look at what you're able to afford and you're like, oh, that doesn't work, you kind of have to plan things accordingly, because how long is it going to take you to save up extra money to get what you want? So you have to think of that.
Yeah.
Get that time frame in there. So let's say it's another year or two, just throwing times out. So let's say you have another year or two, and that time frame over the next year or two, what could properties do? Could they go up in value? Are they going to stay the same? Or are they going to go down? Well, it's very rare that it's going to go down in this market for Calgary, in our economy, et cetera, et cetera, et cetera. And so most likely we're going to see properties go up. So can you save faster than what properties are increasing? So that's where you kind of have to have that thought process and going through your mind, because most likely your gut is probably like, I don't know if I can.
Yeah.
I can only do no spending months so many months in a row.
And to buy some things.
That's right.
Yeah.
So this is where the FOMO feeling that is in our market is a real thing for a lot of people, right? And that's why you're using the word scary, because it's like, it's unknown and I just don't know what's happening. I got to get in.
Yeah.
And so that to me is the logic behind what you're feeling. And to be able to get into the market and then have a property that is appreciating in value as you own it, that's a good thing to have, right? So it's kind of one of those things where you want to make a decision. Do we want to wait and roll the dice, or do we want to jump into something and then we have it because we're ready to go and it works? We can get out of our rental lease, we can make the move, we can make that happen. Or what do we do, right? And so does that make sense?
Yeah.
That's helpful.
No, yeah, that is, yeah.
Okay.
That's something that I never really thought about, was like you focus so much on how much you're putting down for this house, but you don't really realize that house is worth money.
What an offer is you're making an offer. So someone's asking $415 for their property, and you were the first one to write an offer on that property because you're like, I like it, we're good. And you write an offer for $410. It's been on for 2 days. You're gonna say, I'm gonna offer $410,000. I am asking for all of these items like the fridge and the stove to be included, washer, dryer, whatever else, garage door openers. Always ask for your blue and black bins. It's just a weird thing.
Oh, really?
Be safe. I don't know.
What about the green one?
Oh yeah.
Yeah.
Ask for the green one too.
All three of them.
Yeah.
But when you're asking for all of those things, you put those as included. And truth be told, the listing agent is going to say, oh, I had 5 other showings today. I'm going to tell them all that I have this offer now. And what that does is it kind of like kicks people off the fence.
Right.
So if you're the first one to write, be prepared that there probably could be other ones that could write as well.
Right.
And now it turns into a mindset, and you have to get ready to flip the switch from going, I'm going to negotiate with you on stuff, to now I need to write the offer so that you're going to accept mine over those.
Right.
And that's a completely different mindset, and it's hard to do. And so that's what I'm saying before, like when you're choosing the right agent, to make sure they have the skills to be able to help you make that transition, because it can switch, and it switches fast. To be able to know what to do, how much to offer, because you don't want to fall in love with places too soon in this market. You want to be able to kind of, I like it, but I know there'll be another one.
Yeah.
Right? So at a home inspection, you hire a home inspector, they come to the house. They do what's called like a non-invasive home inspection. They're not going to put holes in the wall to look and see what's behind it. It's all very visual. They're going to look around and see what they can see, test what they can test, put water meters on things to make sure there's no moisture in ceilings, roofs, walls, whatever. Do an exterior, mechanical, all that kind of stuff. And they give you a report. Usually takes 2-3 hours.
Yeah.
Condo doc inspections, they usually need a couple of days to go through the condo documents once you get them from the seller. And usually you can't look at the condo documents until you're conditional.
Right.
That's another thing that a lot of first-time buyers ask is like, well, can we see what the reserve fund is? Well, we can ask questions, but they're not going to give us the documents.
Right.
So, and in this market, sometimes you don't have the time to ask to get the information.
Yeah.
Sometimes it's, you'll find out when we do the condo doc inspection. However, if you don't like your financing during condition period, you don't like the home inspection or something in the home inspection that's not good for you, you don't like something in the condo docs, you can walk away. So when you make your offer, you put a deposit down, usually anywhere from $5,000 to $20,000, depending on the price of the property. In your case, probably 5 or 10. So you need to have that money ready for a deposit. That goes to the seller's brokerage trust account, and it's held in trust there. And if you walk away from the property because those conditions aren't good for you, you don't like something in the condo docs. Let's say you've got a 45-pound dog and an alligator, and they're like, no alligators allowed. And you're like, crap, this isn't going to work. So then you can actually say, we're not removing the conditions, we're walking away. They return that deposit.
Right. Okay.
If you say, yes, I want the property, and you waive the conditions, and then you find out they don't allow alligators, and you still have yours,
You gotta sell your alligator.
you either got to sell your alligator, give it to someone else, or you basically, if you try to walk away at that point, you will most likely lose the deposit. So that's kind of how that works for the most part.
Okay.
So there's differences between deposit, down payment. Think of down payment like this, and deposits inside.
So when you pay your deposit, it goes towards your down payment?
That's right.
Okay.
So if you put 5 deposit and your total down payment was 20, you bring 15 to the lawyers when you're signing final documents and closing on the property. And really, from conditions, you are waiting for possession. Do not go lease another car. Do not go buy TVs on credit, or don't go and think you can go down to a furniture shop and just get a whole living room set and put it on their cards that they give you. That is a bad idea. Because the lender at any time before possession can pull your credit again. And if you show up on possession day and they're pulled it and they go, wait a minute, we're not giving you this money anymore. They can choose to pull everything back, and now you lost your deposit. You could get sued because you can't close on the property, et cetera, et cetera, et cetera. So it's just making sure you're making good choices. Like your mom probably would say, make good choices, Callum. And then during your final walkthrough, so when it comes to possession day, typically the morning of, day before, something like that, you'll want to do a walkthrough of the property. And so you go in with your agent. You want to check everything that has water coming out. Check everything that's supposed to be there works, like your fridges, that kind of stuff. Make sure your agent has in their conditions and their clauses and terms of the original purchase contract properly written terms to make sure that those things are stayed. Because if they haven't stayed and they're not working or something's wrong, whatever's on your contract from when you wrote is how the lawyers can proceed. And so you want to make sure things are written properly on that side to make sure you have the legal right to say, no, that's mine, or that has to stay, or whatever the case is. But then you kind of meet the lawyer, give the rest of your down payment, sign mortgage documents, land transfer documents, whole bunch of things you sign, and basically wait for keys. So if you kind of play the process out, pre-approval, get everything sorted out, and then you're looking for a house. You find the house, you negotiate, you get your offer. At that time, you do your home inspection, your condo doc inspections, your financing conditions, anything you can do at that time here. There could be anywhere from 30, 60, 90 days waiting for your possession date. And within a week or two or so of your possession date is when you go to the lawyers and you give the remainder of your deposit, or your down payment, sorry, because your deposit's given back here. And so then that down payment is given here. You sign lawyer documents, you sign everything, do your final walkthrough of the property to make sure everything's good. And then keys are typically released noon of that day of your possession day. And then when you end up having, so actually a huge tip is never plan your move on your possession day. Do it the next day, because depending on the day, depending on the file, depending on the seller, depending on X, Y, Z, anything, that could be delayed to like 4 p.m. Or sometimes it might go and it's delayed for the next day. So if certain documents aren't signed by certain parties, some are delayed, it can cause a delay. So the worst situations we've seen buyers in is when they have a moving truck and it's sitting outside and it's like 1:30 and they're like, why can't we get in?
Yeah.
And they're like, well, we're waiting on the lawyers to give us approval.
Yeah.
Right. And then we've had some times where they've had to like scramble to figure out what to do with their stuff because they only had the truck for the day.
Yeah.
And so it's very rare, but yeah, it's just best case situation. Yeah. So has this been helpful?
Yeah, very helpful. Yeah.
Do you feel more confident through this process?
Mm-hmm. Yeah. Like I was uncomfortable before and now I feel like it's possible.
Cool.
Yeah.
That's good.
Yeah.
That's good. What made the difference for you?
I think just hearing about mostly the financing, like it's all about money. For me anyway, is whether or not I can afford this and I won't be bankrupt later.
Totally.
So that's basically been it. And just the reassurance that it is like, it's not that huge of a step.
Yeah.
Man.
It is a big step though.
Yeah.
And so I think at the end of the day, people have done it before you. Mm-hmm. You're not the first one to do it. And connect yourself with people who are going to care for what you're doing and make sure you are able to make good choices, right? Through that process, and they can advise you properly. So I appreciate it. Thank you for coming.
Yeah, thank you.
Hopefully this is good.
Thanks.
And if you guys like this type of content, please tell us, let us know, because we want to make more of it. And if there's questions we didn't ask or answer, ask below and we'll let you know.